please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Japan's Kobe Steel withdrew its full-year profit guidance and canceled an interim dividend as it braces for the financial impact of its data falsification scandal. For the interim, Kobe Steel reported a net profit of $346 million, beating its own forecast. The company projected an $88 million hit from the scandal, but warned it still can't predict the full impact. But Kobe Steel has friends, shareholder Nippon Steel saying it is ready to provide support if requested. Most of China's big banks showed a recovery in profit growth in their third quarter earnings. ICBC, Agbank, and BOCOM all reported strong earnings and net profit, as well as declining or stable non-performing loan ratios after speeding up their bad debt disposals. Bank of China was the exception, with profits flat and its NPL ratio rising. On Friday, CCB reported a strong 4.4% rise in net profit and a slight dip in NPLs. In other Chinese earnings, China Southern said Q3 profit rose 30% thanks to a stronger renminbi, helping to lower U.S. debt financing. The mainland's biggest brokerage, CITIC Securities, reported a 12% rise in quarterly profit. And Telco China Unicom said 9 months net profit more than doubled, but warned of earnings pressure in the current quarter because of price competition. And time now to get you up to speed with the key events we are watching out for today. Here's what you need to know.
Today in Korea, on the data side, we'll be getting the industrial production numbers and the retail sales figures for the month of September before markets open. And on the corporate side, we'll be getting Samsung Electronics' third quarter official earnings release before markets open as well. The guidance is pointing to an all-time record third quarter profit number of 14.5 trillion won, beating market expectations, and revenues expected to come in at 62 trillion won.
It's China PMI Day. October official manufacturing as well as non-manufacturing PMI numbers crossing the Cape at 9 a.m. Hong Kong time. A Reuters poll suggests 52, a bit of a tick down from the month before. In September, we saw 52.4.
There's a lot of focus on the Federal Reserve today as the central bank opens a two-day meeting on interest rates. Lots of economic data for investors to mull over today as well, including the Case-Shiller Home Price Index for August, housing vacancies for last quarter, and consumer confidence for October. Earnings this morning from some big names, including Pfizer, MasterCard, Aetna, Kellogg, Under Armour, and others.
In these record-breaking markets, it takes a brave person to tell you what to sell. On this Halloween day, we tell you what the scary trades are. And Brent Wilsey, who's president of Wilsey Asset Management, joins us on the line. He has $200 million of assets under management, and he's in San Francisco for us this morning. Brent, great to have you on. Happy early Halloween, I guess, for you in the U.S. So I'm going to get to your picks in just a bit here, but looking at the broader market, I mean, does it? What is your view on where things are priced right now? Because we talk so much about how valuations are so high. It looks like, based on the picks that you're seeing, that's one of the biggest concerns for you.
Yes, and you know, it's funny. We just surpassed the 30-year anniversary of Black Monday in 1987. And people seem to have forgot that what causes markets to decline is when things get too highly valued. The problem is we don't know where the top is, but I know with Halloween coming up tomorrow, I'm scared I'm going to have companies that have low valuations, not these high valuations, because they do well even when markets pull back a little bit.
Speaking of valuations, the FANG stocks, the big tech names, really one of the overheated sectors there. You have Netflix as a sell here. You know, they're coming on the back of some positive earnings, big growth in subscriber numbers. But, of course, there is the cash burn that remains the big concern. Why sell?
Well, and again, I remember one thing great about being older, I've been doing this for 40 years. I remember the tech boom and bust, and the same thing is heard now as back then. Don't worry about the earnings, just look at the growth of the company. And we saw how that turned out. I mean, Netflix, I mean, their earnings per share right now for December 2018, they're $2.26, and the stock's nearly $200 a share. And yes, their earnings are up 166% year over year, sales up 33%. So you look at all these positive things, but a business has to make money sooner or later. And I'm also worried about competition coming in down the road. You got Hulu, you got Amazon. I mean, Netflix is a great product. Actually, I canceled my service because I never used it, but it's not worth $200 a share, and I do believe that sooner or later the time will come where people wake up and say, wait a minute, why are we spending so much for this company? Because the growth does not go to the moon.
And you point out the PE ratio there is at 219.75. Another name that's often associated with Halloween, the actual holiday, is Hershey. And I want to play this sound from President and CEO Michelle Buck before I get your thoughts on the other end, talking about the performance of the company. Take a listen.
We've had strong year-to-date performance. We had a good, solid Q3, growing the top line as well as our EPS in a volatile environment, and we are on track to deliver at the high end of our EPS growth this year, and we feel great about that.
So Michelle Buck there talking about the positive numbers coming out of the company in the quarter. What's the big concern for you? Does that come down to valuation as well?
Well, it comes down to two things. Valuation is a big part because we're looking at December 2018 earnings per share of $5.07. We use a conservative multiple of 16.5, gives us $83 of target sell price. They're around 105, so they're too expensive. But the other thing worries me is they've got a lot of debt on the balance sheet. The debt to equity is 385%. So if things do go the wrong way, you still got to service that debt. Earnings are dropping. They could be dropping. All of a sudden, you have a stock that can fall dramatically, 30, 40, maybe 50%, because once again, you paid too much for a company that had a weak balance sheet. So I'm very scared of this one as well. Even though I love Reese's Pieces and the Kit Kats and so forth, I would not buy the stock.
We do all love the chocolate, especially on Halloween. Let's talk about the positive side of things. One of the stocks you're bullish on, Big Lots. We've seen retailers really struggle this year. This is one of those big box retailers. What's the positive for the share?
Well, just looking at the difference here, I mean, you've got a PE ratio of 13.5. That's below the industry at 19. You've got a price to tangible book value of 3.7 compared to a 14 on the industry. Sales growth is flat, which is why the stock's not doing that hot. But earnings per share of 21%. You've got a great balance sheet with a debt to equity of only 39%. And going out to next year, we see that the GAAP earnings per share of $4.51. That gives me a target sell price of 74. So this company is currently undervalued. This looks to be a great buy at these numbers.
Okay, Brent, appreciate your insights today. Brent Wilsey there joining us from Wilsey Asset Management in San Diego. Australian stocks will be coming online at the top of the hour. Matt Taylor, as always, on standby for us with a preview. Good morning to you, Matt.
Hi there, Akiko. Let's give you a look at the futures picture, indicating that we'll likely see a flat start for the Australian market when trading does get underway in just a few minutes' time. We've got futures down modestly on the back of a decline, of course, that we saw on Wall Street overnight. The currency holding just below that 77 US cent level. Of course, we are awaiting those China PMI numbers today. Could move trade in the currency and also the Australian market more broadly. Woolworths is one we're watching. It's revealed a rise in quarterly sales despite food prices continuing to fall. The supermarket chain revealing a 3.7% lift in Q1 sales from continuing operations. Food sales up by 4.7% despite falling food prices. Woolworths says they were down 2.4% over the quarter, thanks in large to lower fruit and vegetable prices. Elsewhere, Origin Energy quarterly production numbers out from that company today, revealing stable output over the September quarter at 89.1 petajoules. Q1 revenue was up by 1%, but sales fell by 1% over the period. We're also watching the banks. Westpac will face the federal court today to defend those rate rigging allegations. That follows ANZ and, of course, NAB both settling. And Bendigo and Adelaide Bank will update the market as it meets investors at its annual meeting in Bendigo a little bit later on today. And coming up on Street Signs, a first on CNBC interview with Mike Hurst, the managing director over at Bendigo and Adelaide Bank, to tell us what's going on in the regional banking space. Akiko, back to you.
Okay, certainly keeping a close watch on that. Thanks for that, Matt. And we are coming up to the end of the rundown, but we've got a lot more ahead with Squawk Box at the top of the hour. Bernie Lowe joining us from Hong Kong to tell us what is on this Halloween edition of Squawk. And Bernie, you don't really strike me as somebody who dresses up on Halloween, but any big plans?